Hey guys, this is Stock Talk on May 23rd. It's currently 4:38 p.m. Eastern Time. Thank you once again for all of your ticker submissions and just commenting on those videos. I do read every single comment, and it's really interesting, the stocks that you guys are calling out and some of the positions that you guys are taking. So yeah, keep commenting. If you do find these videos helpful, please hit the subscribe button if you want to, of course, and that'll give you a notification every time I go live. And yeah, you'll keep up to date with pretty much the market progress and what we see in the markets in the next few days, and commodities, as well as the tickers that you guys call out. So let's get started on the SPY, which tracks the S&P 500 on the 180-day chart. And we noticed that on SPY there is a support around 270 to 271. We've boxed this area actually whiles way back when we held this support around here, because we know that this support is the turn at least from the bearish to the bullish pattern. So you guys can imagine, if I draw this lower high at that point, we're pretty much at the intersect of the previous resistance area, which is functioning as the new support, and this major bearish pattern. And we know that we flipped from the bearish to the bullish pattern. We just need to keep over and retest this support, so that we can confirm that this is in fact a support and that we can garner the energy for another push up. So remember, even like a couple days ago, we talked about how we were testing it once, we were testing it twice, and we really wouldn't we wouldn't mind if it tested 3 times, and we wouldn't be very surprised if we did get a push back up from 270 to 271, which is pretty much exactly what happened today. So this is a very positive sign for the markets once again, and I like how we are consolidating at the new support. Looking at the 1-year chart, we pretty much see the same pattern. All right, you guys can see that the box represents a support and that we bounced once, twice, and now this is the 3rd time in which we tested the low. Recall, if you were awake this early morning, that the Dow futures were like down at -180 at one point, and this is the time, and yesterday we talked about this, where we were supposed to look for a good entry point that followed the markets. Remember how we are near the support, and this is a good entry point when we're near the support, because should we be wrong, we are wrong a little bit, right? But should we be right, we're gonna win a lot, right? Significantly more. So this is why early morning this was a good time for you to take a position, because we were pretty much at the support. So I hope you guys were able to take advantage of today's market trends. Looking at TVIX, which tracks volatility, we see a very interesting trend in such that during pre-market, I believe TVIX, or volatility, was up like 5%, maybe even a little more, and now we've closed pretty much -3.43%, which is around a net 8% loss from just pre-market. So this is just something that we talked about. Again, we talked about how this was the 20 EMA, right guys? And why was this important? Because every time we hit the 20 EMA, we pretty much get rejected. See, we got rejected here. And today we went over the 20 EMA, but yesterday we called this out, right? It can go over the 20 EMA, but it doesn't have to say that this is a reversal pattern. It doesn't mean that it's a reversal pattern. So we can see that even though it went above the 20 EMA, look how fast we came down. Pretty much we do expect, as markets do start pushing up, we do expect volatility to continue trending downwards, but even making this 180-day low continuously. So I'm still bullish for the markets. That stance hasn't really changed for the past few days. And let's take a look at commodities really quick. This was another very fascinating pattern today, because we had, I believe, crude oil reports that came out today. Just want to make sure that so we had crude oil inventories come out today, and we did see some sort of like downward spike when the inventories came out at 10:30 a.m. Eastern time. You guys can see that there was a major sell-off, but we did recover with crude oil, and we talked about how crude oil, we're looking for an entry point, a good entry point into crude oil. So I will tell you guys about the position that I took today. So after this major sell-off with crude oil because of inventories, right, I found myself a very nice buying point. Now you guys might be asking, well, what's happening? Like, it's trending below the 20 EMA, but you can also argue, and this is my argument, that we have been on a steady uptrend, so that even if we declined a little bit, I bought it pretty much. I'll tell you where I bought in on GUSH, but this is a steady uptrend trend. I'm still looking for it to at least do a double peak, if not even go higher, because this is not really a sign of reversal right now. And if you guys look at the 1 year chart, you guys will probably see the similar things, right? You see we're kind of overextend, but at the same time we can still make higher highs with crude oil. So looking at GUSH, right? This is GUSH, and actually we're looking at the 3 year chart, and we know that GUSH has been making lower highs until now. We've seen a breakout pattern. Please note that this last candle, even though it's a red candle, it has not fully formed, which means on Friday afternoon after markets close, this candle will be fully formed. But now we don't know what's going to happen. So looking at what happened today, right, we do see crude oil pushing down back to its support area. The support area was actually around 39.19, and this is where I bought in today, where I took a position, right? We're below the 20 EMA. I do agree we're below the 20 EMA, but there's still a potential, in my opinion, for crude oil to continue edging higher. So, I set my stop loss, and yeah, just go on from there. You guys can see that this was the support. This line has been there, and how we kind of just bounced off the support, and now we've recovered slightly. So I took a position around $39.65, somewhere around here, and yeah, so we'll see what happens. I'll tell you about PAYC, which is the position that I sold. I think you guys are kind of curious about that position as well. So okay, let's take a look at other commodities really quick. /GC, which tracks gold futures. We know that gold pretty much has been I think consolidating pretty much at the support. Look how we established that this was a support, and this is kind of playing out to a similar degree, in which that this was the previous support. We're consolidating. We went a little bit above, and then we collapsed. Now we're consolidating again. I wouldn't expect gold, it doesn't have to mean that it'll start reversing if it starts trending back up. It can still get rejected at some point, especially when we're at the 50 SMA or the green line, which is the 150 SMA. We'd still get rejected at those points and still come back down. So right now we're looking for a sign of reversal. And if you guys were to take a gold entry position, I think that's okay. So looking at JNUG, JNUG, you guys can see that JNUG has been making higher lows, and that if you did take a position, you know where to set your stop loss. And this is a good safe route, because you can imagine how gold has the potential to make up the room that it's lost. But if you do set your stop loss really closely, you won't lose as much money if you're wrong. I think you guys want to look over JDST too. JDST is pretty much gold bearish trend, and you can see how JDST has been making lower lows. So this is the inverse, and we expect that as gold has been pushing higher, lower highs, sorry, and then we have a support around 44.54. Just note that look, we're at the red line, right? 200 SMA. We know that it's gotten rejected here. It's gotten rejected here, and now we're pretty much at the resistance area again. So which position would you like to take? Well, right now the best position to take, if you wanted to take one or if you had to take one, would be JNUG. So let's look at / natural gas. Here's natural gas futures, and this was a pattern that I thought was it's not too cryptic anymore, right? We pretty much decrypted what was happening here. It was making higher lows and higher highs, and this wasn't very surprising because we know that it's broken over its 180-day bearish pattern, right? This was the previous resistance here, and they formed another resistance here. Now that we've broken out, we're making newer highs. So this is not the time to go into DGAZ. We're still looking for a good entry position into UGAZ. Yes, you might be asking, well, isn't this a good time to buy the UGAZ because it's trending up and can go a little higher? I do agree that it can go a little higher, but the degree of which it goes higher, we don't know, right? So let's wait for it to come back down to the 20 EMA as it has done before, or the 50 SMA, and then once it comes back down, it starts reversing. This is the time to take a position. So let's look at UGAZ really quickly. So this was the pattern that we talked about, right? This was the major resistance, and we know that we've broken over the resistance, and look how we gapped up yesterday, and now we're continuously making newer highs. We talked about how UGAZ has the potential to continue to make up so much ground. Look how much ground it has to make up because of its previous resistance areas, which was a long time ago. The next resistance area I see is around 78.60. Doesn't mean it'll be there, by the end of the week, but it can steadily still climb up. This is actually a very nice pattern. I do like UGAZ right now in terms of entry points to stocks. So let's take a look at the first ticker. This ticker it might be one that you guys talked about. Let's see. Yeah, we talked about GUSH with the bearish or bullish trend. I still think GUSH is more bullish right now because I entered into it, right? So the Giants, hey, how are you doing? Could you look into AMAT? And Kevin, what stocks do you own at the moment? So we talked about AMAT, right? Because it's been trending downwards, and there's a lot of room to make up. Like it can still get rejected the 20 EMA and for it to come down. So AMAT is not something I would like to go into. You can see this almost like parabolic action that's downward trending, and now it doesn't mean that this is going to go back up. Can still get rejected and come back down. We want to invest in something that's an uptrend. This is certainly something that's going downtrend. Okay, hey Freedom Show, how far up will oil go? $100 a barrel. So right now so we don't want to say that it's going to go to 100, right? That's a lot to make up. But we just analyze this on a day-to-day basis, and continue to monitor what crude oil is doing. It doesn't mean it's going to get to 100, doesn't mean it's going to get to $80, but right now we do know that it's on a steady uptrend, and that's just the pattern that we go by. So thanks for your question. Looks like, all right, Brolic Boom. I just bought $10,000 worth of GUSH yesterday at 46.87. Okay, so let's really quickly look at GUSH really quick. 46.87. So you bought it here, and then it had a massive sell-off after. I couldn't get out because I used up my 3-day trades. If this going back up, I'm like down 1,300. So, right. So here's the thing, right? 46.87. This was pretty much at its peak. And even though we know that it was continuously pushing highs, you can imagine how this kind of trend won't last forever. Look how overstretched we are over the 20 EMA, and now we did have a sell-off back to its support area. So what I'm saying is, so next time, hopefully you'll find a better entry position to go in, right? Into a more bullish position. We don't want to buy where the high is. We want to buy where we think the support is or the low is, and just be a little patient. Even though something is bullish, just be patient into entry position. So now that you've bought in, is this going to go back up? So, well, I bought into GUSH today, so this is something that I'm looking forward to go back up. There's certainly potential to get back to $47. It's just a matter of waiting it out, because I like this bullish pattern. As long as we can hold this support tomorrow, we can still see another leg up for crude oil. So just be a little, I think, patient. All right, TMUS. Oh, and one more thing. Since you used up your day trades, this is another, kind of good learning point, right? Try not to use up your day trades, especially if you need to have an emergency exit. If you have an emergency exit, then you would at least have that 1 day trade left. So just be careful. So TMUS, this is T-Mobile, and we know that T-Mobile has held a support around 55.59, and it's been pretty much, you guys can see that I tested it twice. You all can see that it's trending downwards a little bit, and I wouldn't mind if it tested this again one more time. So right now, let's not get into T-Mobile. I like this call out, but so a couple of things I'm looking at right here. It bounced off the support and consolidated around this area. We bounce off the support, and let's see if we can consolidate a little higher off the support. If not, let's see if we can consolidate back at the support, at which time we can take a position. Right now, we're still a little over, I think. Let me just take a look at the, it's just 1.5%. So if you really wanted to take a position, actually, I wouldn't mind, because it's only 1.5%. But just be cautious, what kind of position you want to take. You could get into a better price, perhaps, or you could just be a little more patient, which is what I would do. All right, hey Terry, can you look at KBR? Certainly. So here's KBR, and KBR does look pretty enticing. So there's a couple of things, right? Look how we gap down in this area, and why this is acting as a resistance right now. So you can see that this is acting resistant. Actually, this is a really strong resistance. So you guys can see that we kind of tested it here. I'm not sure if that was just like a, oddball out or something, but you guys can see it, we tested it here. So we certainly don't want to go into this one right now, especially when we're near the resistance area and we're starting to trend down. It could easily, this one, fall back to around its support around 15.15. At the same time, I can see it retesting the resistance, but again, your risk to reward ratio here is not there. It's definitely not there, I don't think. Hey, Craig, can you check out CRM and or INTU? So I'll take a look at the first one that you called out. So CRM is that one on my watch list? I feel like it went up 2.1. Yeah, it is on my watch list. Yeah. Okay, so CRM, we know this pattern, right? This pattern has been a steady uptrend, and I'm gonna actually drag this out a little more. See that it's been making higher highs, higher lows. What a great pattern to invest in. So yes, it did spike over the 20 EMA today, but just note that we have earnings coming up, and we don't want to ride with earnings, especially when we're making pretty much highs every single time. This is just a risk that I'm not willing to take. If you wanted to, you certainly can, but where would we want to buy in? Well, we want to buy in whenever it starts hitting the support, because your losses will be really tight should it start going down. Let's just theoretically say that you invested in right now and you took a position, and look how, what's your feeling if you took a position now? Well, you're going to hope that it's going to go up, but it doesn't have to, because look at the room that it can drop. And then earnings come out. What happens if it drops lower? You're going to be devastated because you lost 5.5%, and your gain would only be around 3% back to its high, 180-day high. So that is not something I would go in right now, but this is a good pattern to actually visualize, especially for all of you beginner traders or intermediate traders who want to find a good position to enter in. Those are the type of tickers that we like to look at. So good call out. Okay, so the last one I'm going to look at is oh wow, okay, so we did 5 to 10. So next time let's talk about we'll talk about TTWO as well as BLUE, but last one I want to talk about is PAYC, which is the position I exited today. I exited around $101, and we talked about this video in terms of the May ticker to watch, right? Is this month ticker to watch. So a couple of things were concerning to me. One is we looked at the 180-day chart. We know that it's supposed to hold its pretty much the 200 SMA, and we know that it can go below, but usually there's a recovery. Look how we pretty much got rejected the 20 EMA, and now we're going back down only to be back at the 20 EMA. So that's the first pattern, and this is a downward pattern. That's the reason why I exited. But I can also give you an argument for the more bullish statement. The 3-year chart is the one that we should use if we're investing in this long term. Look how this has been acting as a support, the 20 EMA line. Where are we right now? Yes, it's on the downtrend, but look how we kind of just scooted it back up. We went to like 99.80 today, I think, and then we just moved back up, back pretty much to the 20 EMA. It does show that we do have some buyers here at the 20 EMA line. So this is not too surprising, and I think this is the more bullish stance. I think the more bullish stance still outweighs the bearish stance right now for PAYC, but because of the 180-day chart and how it's been getting rejected, now I need more definitive proof in that we're going to break over and start back the uptrend before investing into this one. I do, the 3-week, remember the 3-year chart closes on Friday afternoon, and we'll see what happens, right? But this is something I'm monitoring, but I no longer want to take a position in here, even though I just lost a little bit of money, right? I got in at 102, I got out at 101, and I went into GUSH. So doesn't really matter too much. Pretty much made it up on GUSH. So thanks again, everyone, for all of your ticker submissions. We're going to go over those 2 ticker submissions tomorrow, the Tango and Michael. We'll talk about those. And yeah, if you like this video, subscribe. If you didn't like it, I hope you like it in the future, especially if you find this educational or helpful. So I'll see you guys tomorrow, Thursday, for another market analysis. So see you guys later.